righty, let's go ahead and get started. Thank you everybody for taking time out of your busy schedule to visit us today for this webinar. For those of you that don't know me, my name is Andy Rivera. I'm one of the regional sales directors here at Pinnacle Financial Services. Before we get started, just have a couple of rules. Everybody has been muted. If there is any type of questions, please just make sure you use the chat feature and we will answer them at the end of the webinar. Before we get started as well, I just want to show you guys really quick. This is our website, pfsinsurance.com. You can go ahead and follow us on our YouTube page as well, where you get recordings of all of our webinars and trainings. Here in our actual website, you can find all of the products and services that we offer with enrollment tools, CRMs, etc. If you want to speak to anybody in our team, all you would have to go is to About, contact our team, and just contact anybody in our sales team. Based out of the region that you're based, you can contact any of the directors in that area. With that being said, with me today, and if I butcher it, don't say this correctly, Ivan, please correct me. It's Ivan Kajic from Florida Blue. He's going to be giving us an awesome presentation of opportunities that Florida Blue has to offer. Let me go ahead, Ivan, and
thank you, Andy. Good afternoon, everyone. Hopefully you guys can hear me. All right, and I guess while we wait for Andy to pull up the document that we'll go through today, I'll go ahead and introduce myself. So thank you again, Andy, for inviting me to attend. For everyone who doesn't know me, my name's Ivan Chij. I'm the broker manager on behalf of Florida Blue. Currently represent the north part of the state of Florida. And I also have the pleasure of working with Pinnacle's top hierarchy team, so with their regional sales team and Andy, JC, and Raphael on a regular basis as well. So I'm pretty familiar with the Pinnacle organization. Actually, may have met some of you at the event in Nashville back in September. So happy to be with you guys here today. What we're going to go through once we have the presentation up and running is basically just a high-level overview of some of our key priorities, with a focus on our specific growth counties in Florida. So in Florida, we have 67 counties. We have products in the majority of them. However, in most of those counties, we have decided to pause growth in a specific, with a specific population, and that would be the folks turning 65. Whereas we don't have any impact in some of our growth counties, and those are the ones that we're going to focus on. And then towards the end, we'll circle back to the commission side of things, and I'll show you guys basically, what counties and products are commissionable versus ones that are not, so you guys have a clear understanding of that as you present options to your clients. So Andy, I guess just let me know whenever you're ready and we'll get going. Okay, so as I mentioned to you guys, the focus today obviously is not to go through the entire state and every product that's available. So today we're going to focus on our growth counties. And I listed in here basically how we define those growth counties. So if you guys are familiar with Florida or reside in Florida, our focus for the remainder of 2025 and going into 2026 is going to be to drive growth in these specific counties. So first and foremost, the villages where we have a large population of seniors. A lot of you guys have probably heard of that area. And those three counties, we consider Lake Marion and Sumter. In the Tampa market, or close to the Tampa market, we got Polk and Hillsborough counties, and then in South Florida, Palm Beach County. So that is going to be the focus. In addition to that, we'll touch on a product that we have available in 65 or 67 counties as well in the Patriot BPO, and we'll close with that. So, okay, go ahead and go to the next slide, Andy. Okay, starting with the HMO options in these growth counties. So first things first, I want to just make sure the folks are clear. As we go through this presentation, if you see a product, and if you're looking for, say, a dual eligible D-SNP type of product or a chronic plan, Florida Blue does not have either one of those. As far as I know, we have not had a C-SNP type of option historically. We did offer a dual eligible D-SNP plan in select markets, and those were retired at the end of 2024. So therefore, at this point in time, all of our plan options on the Med Advantage side are going to be our core plans. We do also offer Medicare supplements and PDPs that are commissionable statewide. So we'll take a look at those as well. But with first things first, taking a look at the HMOs, we'll dive into the PPOs and then kind of, go from there. So mentioned to you guys, obviously the priority counties of Palm Beach, Lake Marion, Sumter, and Polk and Hillsborough, where we have, in at least Palm Beach, Lake Marion, and Sumter, somewhat similar HMO options in the premier HMO. So in Palm Beach County, we know that's a very competitive market for us. And Florida Blue's strategy on the Medicare Advantage side has always been not to necessarily compete on every line item, but really compete on the overall package. So when you're presenting Florida Blue and looking at certain things, don't be discouraged if you see that our copay is higher by a couple of bucks than some of the competitors out there. You really need to take a look at essentially the entire package. So all of the benefits, all the ancillary benefits, the size of the network, and those types of things to make sure, whether or not Florida Blue is going to be a fit for your client. But in Palm Beach, we have the premier HMO, which is fairly competitive in the market. We have actually seen quite a bit of growth out of that market in this specific product during AEP. Obviously does not have a premium tied to it, out-of-pocket max of $3,200, and PCP copays, which pretty much is standard across the board at 0. So really what I highlighted in green is those are the areas where we are very competitive. So that means either market leading in terms of cost share or benefits, or within a couple of dollars of the competition, essentially, right? So on the specialist side, a $5 copay is very competitive for this county for this type of product. Inpatient hospital at $75 for days 1 through 6 is also very competitive out there, as well as outpatient services. But really what sets us apart on this specific type of product is going to be the drug coverage. And you guys are probably already very familiar with the M3P and how all that works, but really just want to highlight that the premier HMO does not have an RX deductible tied to it. And the first 4 tiers are basically set at a copay level. So what that means is that we basically took the approach to offer an enhanced Part D plan as part of our HMO offering, meaning that somebody who is basically utilizing high-cost drugs, even though they can split the copays, could potentially reach that $2,000 out-of-pocket maximum significantly sooner than if they were basically paying a deductible plus co-insurance related to the cost of the medications, right? So you see basically the first 2 tiers are set at 0, tier 3 at 35, tier 4 at 93, and then everything else after that is basically co-insurance on the tier 5. The other big selling point for us for the past couple of years has been dental coverage. So on this specific plan in this market, which is not the same as some other markets, we do offer a comprehensive dental plan with a $3,000 annual allowance, which is also very, very competitive in the market as well. In addition to that, we also offer a lot of these ancillary benefits like, hearing, vision, OTC at $98 a quarter, and an SSBCI benefit, which is basically, supplemental benefits for the chronically ill, not to be confused with a CSNP type of plan, right? This is essentially just additional coverage for folks who may have one of these chronic conditions. And I'll show you guys on the next slide, I believe, what that looks like. Before we go to the next slide, though, I would like to also cover the premier in Lake Marion and Sumter. So this being also a very competitive market for us that we want to grow in. The out-of-pocket max on this premier plan is set a little bit lower at $2,400, whereas the PCP copay is pretty much the same across the board, with the rest of the competition. Specialist copay is a little bit higher, usually about $5 to $10. But then you also got to factor in, some of the other benefits, right? So the inpatient acute at days 1 through 6 at $115 is pretty close to where I would consider it very competitive. Outpatient hospital services at $85 is either market leading or within $5 of the closest competitor. And then same story on the drug side, right? So no drug deductible and co-pays for the first 4 tiers, essentially giving us an ability to present an enhanced Part D plan here. What is a little different on the premier in Lake Marion and Sumter counties, and it's the same plan for all 3, is that we offer essentially the same comprehensive dental allowance, although the amount is $3,500 versus $3,000 that you saw in Palm Beach. OTC at $133 per quarter is up there, if not the highest in those markets. We also offer the same SSBCI benefit that I mentioned previously, but really the kicker here is the flex benefit that we've had in place for the past couple of years, which essentially gives us an extra $500 to offer to anybody who exhausts some of the other benefits, right? So say on the dental side, if somebody needs major dental work done and the $3,500 allowance is exhausted, once that happens, they can actually tap into this additional $500 benefit that would give them a total of $4,000 towards dental if they wanted to use it on that. But the extra flexible benefit can be used for dental, hearing, vision costs, or basically some of those ancillary components once their original allowance is exhausted. And that actually, depending on how it's bundled or coupled with what benefit the beneficiary wants to use, puts us very close to the top, if not at the very top in some of those categories like, dental, vision, hearing, and those types of things. In Polk and Hillsborough County, we do not have a premier. That was retired a couple of years ago. Instead, we have what we call the preferred HMO. This is it's a curated, high-performing network type of product. So our network on this preferred is at least on the primary care side, is not going to be as broad as what it is on the premier, but specialists and hospitals are essentially unchanged, right? So really the curation here really impacts primary care more than anything. But that plan is basically designed, to be a little bit of a tighter network, but the trade-off there is basically on the benefit side. So we are able to offer richer benefits with a maximum out-of-pocket of $2,100, specialist copay of $5, inpatient acute $120, per day for days 1 through 6, and $90 in outpatient services. And again, same story here on the drug side, no drug deductible and copays for the first 4 tiers. And as I mentioned on the premier in Lake Marion and Sumter, the dental allowance here is, works very similarly, or actually works exactly the same. It's just a different amount that's being available. So $3,000 towards dental that they can spend. Hearing aids are covered, vision's covered as well. So really no change there between the various plans. OTC is $189 per quarter, which is very competitive in this market. Mentioned the SSBCI benefit that essentially gives folks with a chronic condition an extra $100 per month towards a food allowance. And then the flex benefit, again, it's $500 to be used towards additional care once they exhaust the original allowance, whether it's on dental, hearing, vision, that can be applied, however they choose. So all in all, coupled with the additional flex benefit, really, makes some of the ancillary components really strong in this market. But overall, this is a very competitive plan, coupled between the network, the benefits, and the ancillary coverage. Really, the total package, does shine, and so this is a big seller for us in this market in Polk and Hillsborough County. So, okay, Andy, we can move to the next slide, please. Okay, so thank you very much. So the SSBCI benefit, right, for the chronically ill, you guys can kind of see ultimately what that consists of. It's available on the 3 HMOs we just went over. So essentially, as long as the beneficiary completes an HRA, and at the time of onboarding, and we do make outbound calls to all of our new members and try to complete the HRA basically, with either before they come on board, before the effective date, or shortly thereafter. But we make multiple outbound calls to them to basically try to get that completed first and foremost, because this is a very important metric for us to essentially have as part of our quality measures. So as long as the HRA is completed, which should happen fairly early on, and we get a claim for one or more of the chronic conditions, which include CAD, CHF, COPD, and a variety of different neurological and behavioral health conditions, these folks automatically become eligible for the SSBCI benefit. So on the premier plans, except for Lake Marion and Sumter, And we also have one of these in, say, Duval County. If anybody from the Jacksonville area is on a call, basically those folks, once they trigger the SSBCI benefit, automatically get 20 extra meals basically per month sent to them. And we do have nutritionists who essentially work with all of our chronic needs members to essentially find the best fit, and as far as their health needs are concerned, as far as their taste preferences are concerned, so they can customize essentially what type of meals they have sent to them. In addition to that, they also get 3 dietitian consultations per year, and they qualify for an extra $50 per quarter in OTC. Lake Marion and Sumter does not cover the meals, dietitian consults, and the extra OTC, but it does essentially give them an extra $50 a month as a food allowance that they can spend using the Blue Rewards card or Blue Dollars card, essentially a flex card that covers a variety of different components. And then on the Premier, on the Preferred in Hillsborough and Polk County, the same story follows here, where they basically just get a higher allowance of an extra $100 per month, towards the food if they have a chronic condition. All right, next slide, please. Okay, so shifting gears towards the PPOs. And we will revisit the Blue Dollar Rewards card. I believe it's on the slide shortly after this, to kind of so you guys can get a good visual for how this works essentially in practice, right? But before we do that, I really wanted to just touch on the PPO plan options. We basically focus our sales on the value PPOs. This is going to be our most competitive PPO option, specifically in this market. We also have the value PPO available in other markets as well. But these are the markets that are least impacted from a compensation standpoint, right? So you can kind of see here that, Palm Beach County is a highly competitive, market for us on the PPO side. We really did not invest too much in trying to be a market leader on the PPO side. We instead focused on investing more on the HMO front there to better, manage utilization costs and things like that, and essentially keep the benefits sustainable long term. But there are still pockets of opportunity here. Essentially, when you're looking at the out-of-pocket maxes at $5,100, Aetna's not too far ahead of us at $4,900, I believe. We're a little bit better than United's, PPO options, in that market or close to that market. But all in all, physician specialist copays at $45, which is competitive. The inpatient acute at $320 is not too far off from, what the market currently dictates. Outpatient hospital services are also competitive at $295, per occurrence. And then the RX deductible, again, is where we focused on keeping the deductible low. Now, with the PPO plan options, you're going to see essentially, very similar situations here, that there is going to be a deductible, whereas on HMOs, we do not have that, but we try to keep that deductible as low as we possibly can. I know some of our competitors have taken the approach that they set their, RX deductible at the maximum allowed at $590, and we did not want to be quite that aggressive. Now, we know obviously that the $590, does also get applied towards the $2,000, annual out-of-pocket limit. However, that is not something that can be spread out as part of the M3P, and therefore it's something that basically has to be absorbed up front before folks start paying copays. So that was the main driver for us for our decision, essentially, to keep the RX deductible lower at $175 and $150, depending on what county we're looking at, to make it a lot more affordable for folks. And then after that, basically the first 2 tiers don't have, any cost share. Tier 3, Tier 4, and 5 are essentially subject to a co-insurance. So depending on what type of medications they use, they would need to satisfy, that deductible first, and then after that, they pay the co-insurance part, and all of that together combined goes towards a $2,000 annual maximum. Again, same story here as far as, really the two areas where we historically have invested the most. On the drug coverage, we aim to be as competitive as we possibly can be. And then dental is another one where we are very strong as well. So I listed the dental as comprehensive and valued it at about $6,700. And that figure comes from Fair Health and Data based on their 2023 2023 market assessment. Looking at it from a 2024 standpoint, which would be the latest we had available whenever this was being pulled together, the value of our dental plan is actually probably a little bit higher than the 6,700, but we'll just stick with that for consistency's sake. It is not an allowance, so therefore, folks don't just have $6,700 to go, and get care done. Instead, it is a schedule of benefits that includes preventive and comprehensive services and covers a variety of different procedures. So obviously imaging, cleaning, those types of things on the preventive side are pretty much a given. On the comprehensive side, it does cover extractions, it covers root canals, covers a full set of dentures and those types of things, and there are no co-pays tied to it. So if somebody were to exhaust the entire schedule of benefits on the dental side, they'd be getting roughly $6,700 worth of value. And I do have a slide later on that I can show you. You guys can basically see some of these procedures that are covered as part of the schedule of benefits, which is pretty rich overall. OTC at $57 a quarter is also very competitive in this market. There's no transportation on the value PPO plan, so we won't even get into that. Lake Marion, Sumter, and Hillsborough and Polk are going to be very similar there. I mean, you can basically see that the cost shares on the out-of-pocket max are not too drastically different between these counties, but really where we've made investments for the most part is fairly consistent there between them, right? So the specialist copay, we aim to keep that as low as we possibly can, between $25 and $45 in Hillsborough and Polk. Inpatient acute at $290 and $320 per day for days 1 through 6. And the drug deductible, RX deductible, is a little bit lower in Lake Marion and Sumter at $150 for tiers 3, 4, and 5, whereas it's $175 for in Hillsborough and Polk. But same story there. Once they satisfy that deductible, that's when they basically start paying either no copay if it's tiers 1 and 2, or co-insurance in tiers 3, 4, and 5. And from a dental coverage standpoint, everything that I just went over on Palm Beach County applies here as well. It's the same dental plan, same schedule of benefits. So, again, if somebody does exhaust all of the schedule of benefits and all the services that are available, they're basically coming, that comes out to about $6,700 per year. OTC is available in all 5 of these counties, basically at either $75 a quarter or $56 per quarter. Silver Sneakers is included, telehealth services are included, caregiver support, and member rewards. I did not touch on member rewards. That is something that's available in all of our plans across the board, but that's essentially a program that we have available to reward folks who are completing their recommended screenings throughout the course of the year, where they can earn up to $125 per year they can spend on additional healthcare co-pays, those types of things, or even buy healthy foods with it if they so choose to do. All right, next slide, please. Okay, we're going to end this on the MA side essentially with the Patriot PPO. So this is a local PPO type of plan. Covers basically medical components, does not include Part D at all. It does not have a premium, basically, and does provide some of these ancillary benefits that folks can take advantage of. But this plan is really aims for the veteran population, specifically those folks who are not necessarily TRICARE for life, but they utilize the VA for certain services, right? So the reason this might be specifically appealing to them is rather than actually utilizing the VA for their medical care and services, they could tap into Florida Blue's national network, which is going to give them significantly better options in terms of finding a primary care physician or specialist if they need any care. But they can still go to the VA for their drug coverage, right? And so there are basically, we've had this plan in the market for a number of years now, and that's why you see the 2 different shades of blue. The lighter blue is what I'm kind of calling, I guess, the legacy Patriot that's been available prior to 2025, and the darker shade of blue is essentially where we filled it in. These 2 plans are the same exact plan. The only difference between them is how much folks get, in the give back per month towards their Social Security check, right? So the legacy plan is offered $75 per month in Part B give back, and that stayed the same. In some of these new counties, basically that give back amount is $50 per month. And coincidentally, where you see a lot of these dark blue options, that's historically where we did really not have much in terms of coverage or much in terms of plan options outside of the regional PPO, which has also since been retired in 2024. So this is another option essentially to continue to offer a PPO type of plan pretty much throughout the state. It's available in 65 or 67 counties. The only exclusions there would be Broward and Miami-Dade, where this plan is not available, right? So, but depending on the county that the beneficiary resides in, determines essentially how much they get, towards Part B give back. Next slide, please. All right, so and here you can see basically side by side, what the benefit coverage looks like. If you've looked at any of these, MA only type of plans, a lot of them look fairly similar. The differences between them are really going to come down to, benefits versus how much folks want as part of a Part B give back. But really the biggest thing that usually sets them apart is going to come down on the network side, right? Because we know not all carriers are not created equal, and Florida Blue's network tends to be, right up there with, I'd say probably closest to United's network in the state of Florida in terms of how many providers we have available. So with this being a PPO type of plan option, there's really no network curation. So all the, key hospital systems are going to be in network for the most part. The majority of specialists are going to be in network, as well as primary care physicians. And as I mentioned previously, the plans essentially are the same. The only difference between them is the Part B give back amount. But I wanted to still show you that side by side, right? Out-of-pocket maximum at $5,500, is fairly close with where the competition is. Some are a little bit lower, some are a little bit higher, but essentially the trade-off always comes down to, do you want richer benefits or do you want more in the Part B give back type thing? PCP care is set at 0 copay, specialist at $45, inpatient hospital acute at days 1 through 4 at $350 per day is actually very good. When you do the math on that, that makes this plan even more competitive than our value PPO does, because it's in some cases a lower copay, but for days 1 through 5 or days 1 through 6. So therefore, $350 per day at days 1 through 4 is actually very competitive for this type of plan option. Drugs are not included here, but it does still give them a little bit of dental coverage, mainly on the preventive side. So covers some imaging, some cleanings and things like that. And I believe it covers 1 extraction and some denture adjustments, but it's not going to be as rich of a dental plan as what they would be able to get under value PPO. So if somebody is fairly healthy, or if they utilize the VA for a lot of their services and kind of want to have a safety net in case they need additional care quicker, this might be a good option for them to pick up and essentially, save themselves some money as part of that Part B give back that they would qualify for. But it does also include hearing aids, vision, OTC at $50 a quarter. So it's overall a pretty appealing package to the, for that specific population that's primarily utilizing the VA services. Next slide, please. All right, I've spent a lot of time talking about dental, and so this is essentially what the schedule of benefits look like. Now, if you wanted to, take a really deep dive into it and look at the evidence of coverage, you can see, all of that broken out by a specific, procedure code and everything else. But at a high level, I wanted to show you essentially what will be covered. So preventive services, they get 2 exams per calendar year, they get 2 cleanings per calendar year, and a set of X-rays. All of that at no charge. And that's the case across the board on all the plans that we offer. On the comprehensive side, outside of the allowance plans on the right, depending on which plan you're looking at and what county it's in, would determine essentially how much they can get. So it does cover essentially fluoride treatments, it covers a couple of extractions per year, covers a crown, filling, root canals. Like I said, full set of dentures, which is very costly these days, and all of this is basically available to them at 0 out-of-pocket expense. So as long as they utilize an in-network dentist, which there are plenty of them in most markets outside of the Florida Panhandle, where we have a little bit of a dentist shortage in the Panhandle. Outside of the Florida Panhandle, specifically in our focus growth counties, folks should not have any difficulty finding a participating dentist who can basically render all of these services at no out-of-pocket expense to them. All right, next slide, please. All right, and the Blue Dollars rewards card and the different wallets. I mentioned that previously on the member rewards, but then also as it pertains to food allowances and things like that. All of our members essentially who qualify for one of these benefits or who opt into the Blue Dollar rewards get a MasterCard that looks very similar to what you see on the screen, right? And that Blue Dollar rewards card essentially has 4 separate wallets depending on what plan folks are enrolled in, right? So Classic HMO, Value PPO, and Patriot PPO, folks only are eligible essentially to get the member rewards. But once we start looking into the Premier HMO and the Preferred, in those cases, not only do they get the member rewards, but they also basically get that Blue Dollar rewards card if they qualify for additional OTC. If they wanted to go to Walgreens, Walmart, and spend that extra $50 that they're getting, they can just use that Blue Dollar rewards card, and it knows that basically if you're buying Advil, for example, right, that it needs to come out of the OTC bucket rather than out of the member rewards bucket. And once the OTC bucket is exhausted and they need to buy additional, supplies, then it would start coming out of the member rewards bucket if they have funds available to spend there. On the Premier and Lake Marion and Sumter, the member rewards apply. OTC or retail, it does apply. The healthy food allowance also resides on this card, as well as the flex benefits for dental, hearing, and vision, right? So once they exhaust that $3,000 allowance, then they can basically swipe the card at the dentist office to take advantage of the extra $500 if they need additional care above and beyond what's provided under, the original allowance amount. But all that to say is that ultimately the card is smart enough to know if it's dental work, it's going to pull it out of the dental bucket. If it's a healthy food allowance, it's going to pull it out of that amount. Same for OTC and member rewards. And it is definitely possible that somebody could exhaust all of these different benefits if they have funds available to use, but it will start first and foremost on flex. That's what we're basically charging towards the card, then the healthy food allowance, and so on until they basically exhaust whatever's available for that period of coverage. So, all right, next slide, please. Okay, so on the Medicare supplement side, I wanted to basically just quickly highlight what we have available here, and we'll touch on this in more detail on the next slide as well. But essentially, we have 14 plans available. 10 of them are standard plans and 4 select plans. The select plans are essentially tied to a hospital network, so no impact on physician services at all. Really, what makes them select is essentially what hospital you can go to get the care that you need on the select plan, which makes them a little bit cheaper than the standard ones. Plans M and N are currently excluded from guaranteed issue. So if you come across somebody who's got guaranteed issue, they want to pick up a plan G, that's not a problem. But if they want to pick up a plan M or a plan N, they would not be able to do so with guaranteed issue. However, as I will show you on the next slide, one of the neat features about our supplement plans is essentially that if you do come in with a guaranteed issue and enroll in a plan G, but you want to pick up a plan N down the road, you can do that once per month. So we do allow changes between the various plans. As long as there's no break in coverage, you can go from G to N, from N to G, and so on and so forth. And there's no underwriting requirement as long as there's basically no break in coverage. So that's another neat feature to kind of circumvent the system. If somebody does want a plan N, but they can't get it because it's guaranteed issue, they can go into a G and then change to a plan N next month if they wanted to, right? So, and again, on the select plan side, the select M is also excluded from guaranteed issue, but B, C, and D are available depending on the eligibility of the beneficiary and when they enrolled in Medicare. So, next slide, please. Okay, just to further highlight the supplement side, I mean, obviously supplements are a focus area for us to grow in. And if you guys are keeping up with some of the industry, insights and news, you're probably noticing that a lot of carriers are either, getting rid of supplement plans due to significantly higher than anticipated, loss ratios, or the premiums are going up by a significant margin. So Florida Blue, we never focused on being the value carrier when it comes to this. But we do focus on being the sustainability carrier, right? So even though our prices for various plans, depending on the tiers, may be a little bit higher now, the goal there is essentially just to avoid any spikes year over year of 20, 25, 30% that folks usually get sticker shock from and then start looking for changes. But we do have 3 rating areas in Florida available. So rating area number 1 is primarily South Florida, Palm Beach, Broward, and Miami-Dade. This is going to be the most expensive, type of plan. Essentially, just that rating area tends to drive a lot of medical costs, and therefore prices are adjusted accordingly. Rating area 2 is basically the majority of the state, in Southwest, the Orlando market, Tampa market, Jacksonville, as well as the Panhandle. And then rating area 3 is going to be the most affordable. So Polk County, again, sticks out here, even though we know that Polk County and the Villages areas are, very heavily Med Advantage dominated. If you do come across somebody who's looking for a supplement plan, those counties would be rated as the lowest cost ones, as well as some of the counties in the, Panhandle, in the Tallahassee market, and anything essentially between Tallahassee and Jacksonville, as well as, south of the Jacksonville area. We do have out of Florida rates if somebody does basically want to sign up for a Florida Blue Medicare supplement plan, decides that they want to move outside the state. There's a small premium difference there, but it is available. Smoking and non-smoking status will obviously impact the rate as well as the various age bands, right? So we have an under 65, usually disability age band, 65, and then we also have the 75, 79, and 80 plus. And believe it or not, I do actually see quite a few applications come through from folks who are well above 80 years old and still qualify for one of the Florida Blue supplement plans. The reason for that is that our underwriting services tend to be some of the most relaxed. So GI aside, when we talk about who might qualify from an underwriting standpoint, essentially our rules are fairly straightforward. There are some automatic exclusions, so end-stage renal disease, pending surgeries, frequent hospitalizations, heart disease, diabetes, and you see the asterisk next to diabetes, and I'll touch on that in just a second. But cancer, COPD, if they're on oxygen or diagnosed with HIV, those would be automatic disqualifiers. The reason the diabetes is sort of called out here is that there's a difference between managed diabetes versus unmanaged diabetes, right? So as you look at the application process, you'll be able to essentially determine whether the condition of the beneficiary may qualify them for a supplement plan, even if they are diabetic. So just being a diabetic is no longer a death sentence when it comes to picking up a supplement plan. There are definitely plenty of folks who do qualify still, despite being diabetic, if it's a managed situation, right? We do offer an automatic, it's a small discount essentially if somebody does, enroll in automatic premium payment. So that's 1.5%, less in terms of premium. And the other nice feature about this is that we basically do offer the same age forever. So what that means is if you come in and sign up for a Florida Blue supplement plan in 2025 as a 65-year-old, 5 years down the road, you'll be 70 years old, and premium will more than likely go up between 65 and 70. However, even at 70 years old, you came in as a 65-year-old, and therefore you're paying the premium of whatever the corresponding premium for a 65-year-old is at that time. So it's not that your rate is locked in forever. We would not be able to sustain that. However, we're not going to penalize you for aging if you came in at an earlier rate. Essentially, what you're going to be paying is the age that you came in, not the actual, the retail price for your age at the time. So that's another nice feature here. Silver Sneakers is available. It's as an optional add-on if somebody wants to get it. It's an extra $28 a month. Some folks, don't really have a desire for that, so we didn't necessarily see, that as a necessary component to build into our, rating structure. So it's an optional add-on if somebody does want it. And I did mention the other benefit of, the ability to change plans from month to month without having to go through underwriting. So once you're on, you're on. And therefore, if you have a procedure coming up and 2-3 months down the road, it's something that you can foresee, by all means, you can switch your plan to a richer option to cover the cost of that procedure. And then when you're hopefully fully recovered, switch back the following month and there's no penalty to you. So there's no underwriting that you have to go through again. It's essentially just a month over month change up or down. So from that standpoint, that's another nice value to pitch to your clients if they're looking for a supplement plan option. Okay, next slide, please. All right, commissions. This has been a hot topic over the past, I don't know, year and a half. A variety of carriers have basically, made changes to how they pay commission. And unfortunately, Florida Blue is one of those as well, where we simply had to adjust, where we want to grow and, what plans we consider commissionable, right? So a reason I wanted to highlight this is, and this is also what's driving the priority counties, is when you look at the product type. So the value PPO, for example, new to Medicare is not commissionable unless it's in Lake, Marion, and Sumter, right? Now, if you got somebody who's currently on a, I don't know, pick a carrier, they're on a Med Advantage plan and they can utilize the disaster SCP, they want to make a change now rather than waiting for AEP. Those folks, those switchers, we would pay commission on all of those new to Blue sales. Except for Broward, Indian River, Martin, Palm Beach, and St. Lucie County. And even if it does end up being in one of those counties and you basically end up, signing them up for a Florida Blue Value PPO, you wouldn't be receiving commission in, say, Broward County today, but you would still continue to get renewals as long as your client stays with Florida Blue, right? So the point of this is really just to kind of highlight, it's not that Florida Blue is not paying the commissions across the board. We are paying even on T65s in certain cases. So the Patriot PPO plan in 65 counties is fully commissionable on T65s. The Premier, we're not paying commission on T65s in most counties where it's available, with the exception of Lake, Marion, Sumter, and Palm Beach, which again, those are the priority growth counties. Switchers on the Premier, we're paying everywhere except for Broward, Orange, and Osceola. And then renewals across the board, those basically are going to continue to be commissionable. The classic HMO, again, not that we have a ton of folks jumping up to sign up for this one, but that is not a commissionable plan on T65s. But if you're selling in the Florida Panhandle, for example, that is a fairly good option out there. And if it's a plan switcher, then you would receive commission for that as well as renewals. But if it's somebody turning 65 who wants this in Pensacola or where have you, then they would not, you as the agent would not be compensated for that initial enrollment. Medicare supplements are commissionable in all counties, as are PDP plans. So not only new to Medicare, but as well as the same thing for switchers, the same thing for renewals on the MedSup and PDP side. So I believe that is the last slide, Andy, unless I'm missing one. That should be it, I think. Yep. Okay. Do we have any questions or any
checking
thoughts?
the chat here? No questions so far. If anybody has any questions, you could please put it on the chat feature. Just let us know.
All right, and if we don't have any questions now, if something does pop up, after we hang up, feel free to reach out to me or reach out to Andy or JC and Rafael. They can point you to me as well as my counterparts in other regions who support brokers regionally as well. And we'd be more than happy to support you however we can.
Once again, thank you to everybody for attending. Thank you, Ivan, so much for all this valuable information. Hopefully, If anybody wants to contract and find more information, again, reach out to myself or any of the directors here at Pinnacle Financial Services. You can always contact us at 1-800-772-6881 for any questions. And again, thank you, Ivan. Thank you, everybody. I hope everybody has a great start to their week.
All right. Thank you all.